This week we are talking about, and I know we just passed tax time, but it's always a fun time to talk taxes and money, right? So this week we got a question, and I believe is this a client question or from the community?
It was a client question.
All right, great. Yeah. So this was a client question, and they said, our company likes to give gift cards to employees, and our new HR person said that they have to be taxed. We've never done that before. Have you heard of this? So, Summer, I'll let you give the context behind this one. I do have experience with gift cards, and I kind of think I know where you're going to go with this, but let's go ahead, take it away.
Absolutely. I know that taxes and the IRS, especially this time of year, it doesn't necessarily make everyone feel great. But I do think that it's really important to understand the law in regards to this because it is not only very common to make this mistake in small companies, but I've actually seen it in large organizations as well. So the takeaway here is that if you are a business leader, small business owner, HR professional, anybody in an organization, payroll folks that do see gift cards being awarded in your organization, to please listen up because we want you to get this right. Okay, we want you to make sure that you minimize your risk and that you're compliant. So I thought that we'd talk about this one today. So first, let's tackle a little bit of what the IRS rules are surrounding this. So the IRS has a term that they call a de minimis fringe benefit. And when it comes to gift cards, they're actually considered the same as cash. And also go on to further explain that that is any amount, okay? Because there's this very common misunderstanding that if it's under $25, that it doesn't count, that it doesn't qualify, and the IRS says, so sorry, any amount actually counts and must be taxable. So I won't go into kind of all of the reasons why, but essentially because it's easy to administratively determine the value of that, the IRS says that if you are a company that gives gift cards or other de minimis fringe benefits like season tickets to sporting events or membership in a private country club or athletic facility using employer-owned facilities like an apartment, or if maybe your company's super fancy and they've got a boat, those types of things are actually taxable. Now, I know I'm totally just ruining everybody's fun.
Yeah, because I wanted a company boat, Summer.
Well, actually, I think I heard, Joey, that you were taking boating lessons. I think we talked about me convincing you to buy a boat. So perhaps you're going to be the one that's buying the company boat soon.
We'll see. We'll see.
So just to kind of recap this, when it comes to gift cards and some other benefits that you may be offering your employees, unfortunately, I hate to be the bearer of the bad news, these are taxable. These are taxable. So I think you have a solution on how to tackle this. So we're not saying don't award these to your team members, but there's kind of a second step that we need to do to make sure that we're doing it right. Joey, you want to take that part?
Yeah, I'd love to take that part, and you can sort of if you've got some additions that you wanted to do, but there is this idea of grossing up a benefit, and there are plenty of calculators online. I think we can help you with this as well. We've got a CPA on our team that typically will handle payroll matters, but you want to gross up the benefit so that you're aware of what those taxes are for you and for the employee. And in addition to that, you want to make sure that it's registered on payroll records. There's a way to add it to payroll records where it's tracked for the purpose of W-2 income at the end of the year. but it's not necessarily like you're not giving the $25 through a gift card and then you're giving $25 through payroll. It's just tracking it for that sake. And if you have any questions about how to do that, you can reach out to us and we'll help you. Um, but that's the extra step that you should be doing. Summer, are there any other thoughts about that process or any best practices that you're seeing or recommending?
There absolutely is, because what we're finding is that many companies don't understand how to do this properly, and they want to do it right. So there is a little bit of this transition period. And, one of the things that we work through with our clients is, first understanding why this exists, to implementing the process, as you indicated, to set up their payroll system, to apply the tax effect on the payroll records to ensure that the team members are being taxed on the value of what they receive. But there's also this about communicating it to team members as well, so that they don't suddenly see something hit their check that they're so confused about. And I think this is really important, because if you're giving somebody a gift card, there's a reason, right? You are giving them something that you want them to appreciate. Now imagine if they're super excited to get this gift card and then like their paycheck's lower and they don't understand why, and you're like, oh, because it's you got a gift card. Like now it's not going to have that same like exciting effect at the same level if they're like, well, that's kind of a bummer. So the key here is to communicate in advance and
Yeah.
just create a policy so that everybody understands that, we have this policy that, our company wants to be compliant. We're going to follow the policy. This is how it's going to work. So please know if you get a gift card that you will see it on your paycheck, no surprises and it's really that easy. But I have had situations where this has not gone so well.
We've got time. We've got time. Let's go ahead and hear it.
Considering offering gifts or gift cards in the future. So where I've seen this happen is companies like to give out holiday gifts. And in this instance, they were gift cards to a wide variety of stores, venues, theme resorts, and they were just kind of random. So sometimes what would happen is a team member would get a gift card that was to something that, of course, they were grateful for the gift, but that they wouldn't necessarily use, right? And sometimes team members would trade amongst themselves, and that was great. But in the event that somebody received one that they wouldn't be using, well, now they're kind of bummed because they were going to be taxed on something that they were never going to use.
Yeah.
Right. So I only call that out because I think it's really important to evaluate, like, one, that you have this process in place, but two, how it's actually playing out within your organization if you are giving gifts. Because again, how bummer would it be as a company to give a gift and then it maybe not have the intended effect with your team member?
Yeah, I agree. I agree. And that's part of the effective HR, which is communication, awareness and communication. And if you are an organization that struggles with either of those, we're a team that can help you.